Welcome, welcome, Symmetry Nation. I wish I could see all of the 48 current people. It's going up. Excited for you guys today. Get a special treat. If you don't know who I am, I'm Mike Colburn, equity partner, senior vice president. My wife and I are both direct to Symmetry Financial Group. We also have another 120 in our organization with Chris Clark. So running a good size organization, but this call is not about me. I am here to introduce a couple of good friends and pass it over. We're going to talk about some basics today, and what a treat we're going to have. You guys are going to get an opportunity to hear from our 2 years consecutive back-to-back Golden Pen winner, Omar Diaz, who is also growing a great organization himself. And we've also got some amazing producers with us, Jeremy and Elizabeth Casteel in the Dilbert Agency. So super excited to have you guys share with us some of the back to the basics inside of sales. So I'm going to pass it over to Omar, and we're going to get straight into it. If you guys will get your pens, paper, there's going to be a lot of notes. I know that this is being recorded, but do your best to take good notes. There's going to be a lot to cover. So without further ado, I'm going to pass it over to my good friend and Golden Pen winner, Omar Diaz.
Mike, thank you so much. Liz, Jeremy, thanks so much for being here. For the sake of time, but I can't help it but to start this meeting with sharing just a bit of gratitude. It wouldn't be possible not to do so. So Brandon, Casey, Brian, thank you for this marvelous opportunity. Thank you for the opportunity to not have to buy leads, but get to buy leads, to not have to recruit, but get to recruit. And thank you for the whole Pritchett hierarchy. Pritchett, Vanderbilt Smith, Mike. I am direct to Christopher Clark, very good friend of mine. And I just really, for the sake of time, want to get into it. My hope is to serve you in the best manner possible. And it's titled Back to Basics, Mike and Jeremy and Symmetry. I feel really weird because I don't feel like I'm talking about basics. I feel like I'm talking about what I've always talked about for the past 4.5 years. So let me just get into it. Jeremy and Elizabeth, they will be the host today as far as our clients. And what we're going to do is just going to go through the Symmetry script to help you. I know we got a script, but we want to help you just kind of illustrate how it goes in the home. And hopefully this will get you something that you learn today and go out and use today. That's my hope. Okay. So I'm going to start my Zoom like it was a regular client, and we'll take it from there. Boom, I'm starting it. Hey, Mr. and Mrs. Casteel, how are you today?
Hey, we're good.
Excellent. So my name is Omar. Thank you for joining me today. I'm going to be meeting with you today regarding the mortgage protection options you requested today for the day. And we'll let me just dive into it. Is that okay with you?
Sure.
That works.
Excellent. So let me share my screen. Elizabeth, Jeremy, this is my screen right here. I want to talk to you a little bit about what we're going to talk about is mortgage protection. My name is Omar Diaz, and that right there at the bottom is what you see is my state license number, okay?
Okay.
So, Jeremy, Elizabeth, if you don't mind, I would really appreciate it if you take a screenshot of this right here. That is my state license, and that is my business card, okay? If you notice, my state license has a number right here, and my business card has a state license here as well. We just want to make sure, I just personally want to make sure that when we talk about this right here, you know who you're talking to. You can look me up online, you'll be able to do all that information. But I just really want to make sure you know who I am. And if you have any questions, that is my direct phone number. If I don't answer you from time to time, I get phone calls, and you get a text message. I'm in the home of a client, or I'm meeting with a client, or something like that. It doesn't mean I'm going to call you back in a few days, but it does mean I'm going to call you back minimum in a few hours. Okay, that's just what we do. Sounds good?
Okay.
All right. So, Jeremy and Elizabeth, if you don't mind, let me just dive in And start by verifying some information you sent over to your office. Sounds good?
Yes.
Sure.
Okay, this is part of the information that we verified on the phone, but I just want to make sure we didn't miss anything, okay? So Jeremy, I want to make sure we got this right, and let me pull this information up. Okay, I got you here as Jeremy Casteel and Elizabeth Casteel. Now, is it okay if I call you Jeremy and Elizabeth? Is that okay?
Sure.
That's perfect.
Yeah.
Yeah. Elizabeth, and do you like to be called Elizabeth or do you like to be called Liz?
Oh, Elizabeth's good.
Elizabeth's good? Okay. So we got Jeremy and Elizabeth. Okay. Now, Jeremy, let me start by verifying some information. We'll take it from there, okay? I got your date of birth of February 16, 1978. Is that correct?
That is correct. Yes.
And you are here 44 years young, right?
Correct.
All right, excellent. Notice how I say young because I'm young as well and I'm 44 as well, okay? Now, I have right here that you're 5'10", 240 pounds, right?
That's right.
And you do not smoke.
No, sir.
And then when I asked you all the medical information as far as high blood pressure, heart conditions, sleep apnea, things of that nature, you stated no to everything. Is that correct?
Correct. Yeah.
All right. And then as far as medication, you stated you're not on any medications.
None.
Now, for the sake of clarity, Jeremy, I just want to ask you, hey, have you ever been prescribed any medications? I get it, you might be taking anything, but I just want to make sure you've never been prescribed anything, okay?
No, other than, the antibiotics and things like that when you're sick. Nothing.
Okay, nothing major. Sounds good. All right. Now, I have right here that you stated that you do have life insurance, correct?
Correct.
And how much life insurance do you have?
We have about 250,000 through work.
To work? Okay, got it. So basically, you have an insurance policy that your work is providing for a minimal amount, right?
Yes.
Gotcha. Okay. Then your mortgage is 237,000 and some change. 484 is what I got.
Correct.
And you got this on a 30-year note.
Yep.
All right, excellent. So Elizabeth, I have your date of birth of June 3rd, 1980, and you're 41 years young.
Yes,
Excellent. 5'9", about 140 pounds.
correct.
You don't smoke either.
I do not.
And none of you plan on doing so, right?
No, not today.
It's a good thing. You don't want to do that. Now, right here, that's all I got. Now, do you have any life insurance, Elizabeth?
I just have 100,000 that we have through his work because I stay at
Here,
home.
his work as well? Okay, got it. Okay. Now, Jeremy, what do you do for a living?
I work in sales.
Sales? Excellent. Nice. What kind of sales?
Just travel. I deal with manufacturers.
Manufacturers. Excellent. How's that going on?
It's a little costly right now.
Nice. Well, as long as we have a job, right? We got to be grateful.
Yes.
Now, Elizabeth, let me ask. Elizabeth, do you provide any income for the home? Because I know you work very hard, but do you provide outside? There's a check. Is there a check coming in for you all personally from you?
No, I stay at home with the kids.
So you just work really, you have the hardest work at home.
Yes.
Okay. Got to be careful because my wife is a stay-at-home mom. And when I say, well, she doesn't work, she really gets really upset. So I just want to be very careful when I express that. Okay. So, all right. So let me ask you this. Got all the information I need right there. Now you sent this form into our office, Jeremy. You remember this?
Correct.
Gotcha. So let me ask you this. What did you want this protection to do for you when you sent it in? What did you want me to do?
I really don't know. I'm just looking for probably the cheapest price. I mean, the best price you can get me. If I need anything, I really don't think I do because, like I said, for work, I have 250,000. That covers me at work.
Gotcha. So you got 250,000 that covers your work. Okay. We'll talk about that a little bit later. I appreciate you telling me that. But what did you want this protection to do?
I don't know. I guess if something happens, the house get paid off for Elizabeth.
Gotcha. What if you didn't have this, Jeremy, and you could use, your life insurance from work? I guess that's what you're saying?
Correct. Yes.
Okay. And how long have you had this life insurance from work?
I've been there for the last 12 years. So
12 years. Okay. Got it. Excellent. Now you have been in your home how long now?
we've been in our house for 6 months now.
6 months. Congratulations. Is this the first home that you buy?
No, we had one before.
You got one before? Okay. And your other home, you paid less or more than you pay right now?
Oh, less. Yeah.
Less.
It was our first
Okay.
home.
Got you. How much you paying for your last home?
Per month, the mortgage,
Mhm.
like $1,200 a month.
$1,000 a month. Okay, got it. Now on this home, what is your current monthly payment?
1,800.
1,800. So you're paying about $600 more for this home now.
Correct.
Correct. All right, man. I appreciate that. So that was your startup home is what they call it, and now you moved into the bigger, the better home, right?
Yeah, absolutely.
Congratulations. Exciting, right? That's awesome. I
Yeah,
love that.
thank you.
Now, but you did state you had your other life insurance for 12 years and you had your home for 6 months only.
Correct.
So clearly you didn't get that insurance policy to cover your mortgage, right?
No,
Okay, what
Just
did you get that insurance policy for?
just in case something happens that Elizabeth and the family's taken care of.
Okay, something happens. So in case something happens that really Elizabeth and the kids are taken care of, but you didn't have a home back then. So what did you want it to cover?
Sure, living expenses.
Yeah, just living expenses and lifestyle.
Okay, got it.
Invest.
Living expenses. Okay. So if we use this life insurance to cover your mortgage, what are you going to use to cover your living expenses?
I guess that policy still.
This
From
policy. Okay. So you have 250,000. So you think about 12,000 is going to be enough for your living expenses?
Well, no, I guess not.
Okay. So
Like,
again,
that way.
yeah. Well, I don't want to put it that way. Don't get me wrong. I just want to know because I don't want to appear nosy. I just want to know so I can help you the best way. Because if you originally bought that policy and all you wanted to do was cover your mortgage and Elizabeth was going to go back to work and you said you had kids, right?
Correct.
How many kids you have?
We have 5 kids.
5 kids. Okay. Who would take care of those 5 kids?
It would be me.
Okay. So Elizabeth, you're going to carry 5 kids. Now, who is going to work?
I guess I would have to get a job outside of the home.
Gotcha. Okay. Fair enough. If you're out working now, who's going to take care of the kids?
We'd have to probably look into after school care.
Okay. And who's going to pay for that?
Yes, you
Guess
would
your
have to.
policy, whatever's left, or whatever I can bring in.
Okay. So you're going to have about $12,000. I just want to, for the secretary, I just want to know. Okay. Please don't strike me as, hey, I just want to know because you're only going to have about $12,000 left if something would happen to Jeremy tomorrow. Okay. So would you rather just sell the home and go into an apartment?
No, we can't fit 5 kids in an apartment.
Gotcha. Okay. Just perfectly fine. So Jeremy, again, I have to go back and ask if you had insurance before and you don't want that insurance to cover your home, what do you want this insurance to cover?
I guess cover the home.
Cover the home. Okay, so now we got that out of the way. We want that insurance to make sure if something happens to you, Elizabeth has your own income coming in. She can take, if your kids have soccer practice, she can continue to take them soccer practice. If they have baseball, basketball, and I say soccer because if I pass away, I want my wife to be able to take my kids to soccer because that's what they do. So we do soccer. I don't know what kind of sports your kids do. What do they do?
We've got one in volleyball right now, and that's pretty time consuming.
Volleyball. Okay. And you want is that your daughter or your son's doing that?
That's our daughter.
Daughter, and you want your daughter to continue to do volleyball?
Yeah, absolutely.
Excellent. Well, great. Well, here's what we're going to do today. Okay. Let me stop sharing my screen a little bit just so I can see you a little bit better. Boom. I can see you now a little bit better. Biggest concern right here is, hey, we want to make sure, I know why you want this. You want to make sure Jeremy would have what I've heard, Jeremy has an insurance policy that's going to be able to cover his salary, you could say, at least for a certain period of time. Okay. You want to be able to keep your girls, your kids, being able to go to sports. We know when we lose a loved one, emotional things come up. We want to deal with the finances, not with the finances, the emotional at the same time, and then the burden of that, right? Correct? Okay. So excellent. So let me tell you what my role is today, Jeremy, just so you know what I do, okay? I am what you call the field underwriter, okay? Essentially what that means is really, I'm gonna show you some options, okay? I'm gonna show you 3 different options. I already got lined up for you right here. After that, I'm actually what you call a broker as well. So that just doesn't mean I don't work for an insurance company. I don't work for, there's insurance companies out there like Mutual of Omaha, Foresters, Americal. I don't work for them. I work for you. I do all the shopping. I really did that already. My job is finding the best rate at the best price. And then when we're done going through the options, I'll help you apply for your protection today. Okay?
Okay.
All right. Another thing about this ain't like the old type of mortgage protection, okay, Jeremy? The same, it doesn't pay off what you owe, it pays off what we applied for today. So if there's any benefit left over, hey, you can use that benefit, Elizabeth, for whatever else you want to. It could be for final expense, it could be for, hey, just want to have some extra cash. 250,000 seems like a lot, but it really isn't when you start putting into how much you make. Jeremy, you stated right here, you make over $100,000 a year.
Correct.
So you got 2 years and 2.5 years of salary. That's all you got right there. To keep your same lifestyle, you only got 2.5 years of salary. So some of that insurance policy, most people don't pass away as soon as they buy their insurance, but there will be benefit left over when the time comes. Okay.
Okay.
You'll be able to get that directly. It will not be given to the bank. Okay. Now, you stated at the beginning that this was your second home, right? Do you plan on living here forever, or maybe you move in the future?
I don't know. I mean, we never say never. I mean, we just moved here, so that's not really a thought about moving in the future, but you never know.
You never know. Okay. Well, if you do, this same policy, Jeremy, Elizabeth, you can get it to your next home. But let's say you move 10 years from now. The reality is this: 10 years from now, what you pay now is going to be 10 years more expensive, right? Sure. You won't have to worry about that. You already got the mortgage protection in place. You can get that same policy and transfer it over. If there's any, you start off with a $1,200 payment, now you're up to an $1,800 payment. You probably paid about $100,000 left from the previous home to this one. If you like to upgrade to a bigger home, you already have the $237,000 in place. Hey, let's say you get a $300,000 mortgage. You can keep the same policy and just, not be with the extra $70,000, or we can look in the future into a $70,000 policy. But the price to apply for $70,000 extra is a lot less than to apply for $300,000. But your policy is already in force. No one can take that away from you, and no one can get that price away from you as well. That sound fair?
Sure.
Mm-hmm. All right, Jeremy, so that's all out of the way. So what I'm going to do now is let me share my screen. I'm going to go through some different options. Now, Jeremy, Elizabeth, I've been doing this a long time, okay? And from time to time, I do get, not many, but a few clients do say, hey, let me think about it. Let me pray on it. Let's get it out of the way. That's really being around the bush. And when essentially what that means is the price isn't right. Jeremy, Elizabeth, just tell me, Omar, that's out of our price range. We'll look into something that's more affordable so we can get you some protection. It's better to have some protection, okay, than no protection at all. So we might have to start off, but I'm not saying that, we might go over an option and say, hey, that's great, I can fit in my budget, we'll go ahead and go that route. But if it doesn't, please, 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 I ask, hey, just don't beat around the bush. Tell me, Omar, that's out of our price range, okay?
Okay.
All right, so let me share my screen and then we will take it from there, okay? So, sorry. So here, boom. Pull it up right here. Technology, gotta love it. Apologize. There we go. Jeremy, Elizabeth, can you see my screen?
Yes.
Excellent. So I'm going a few different options right here. So Jeremy, we stated right here that your mortgage was $237,000, correct?
Correct.
All right. Now, a little bit about mortgage protection. It doesn't just cover your home if you die. It covers in the event that you don't. Okay, sounds weird, right? Well, let's say you have a heart attack, Jeremy. Okay. Well, life insurance is great. You have a heart attack. You have that life insurance to work. That's great. But what if you don't die? Okay. What would happen then? What kind of money would come in? And typically what happens is the bill still come in. The income doesn't come in anymore. If you have some sort of term insurance or term, what's it called? Long-term care, short-term care through work, it might help you, but it's not going to help you the same way. Okay. So what this does, Jeremy, most policies are going to have what we call a critical illness coverage. Okay. That's in the event of a heart attack, stroke, cancer, organ transplant, something that you wind up in the hospital, but you don't pass away. Okay. That's great. The reality is this is what happens. Okay. I had Jose, he had a heart attack. He was a truck driver, drove to the hospital because he had massive back pains. When he got to the hospital, the problem wasn't that he was having a heart attack. The problem was that he had kidney stones. Okay. What happened was really because he was having the pain so bad, his blood pressure elevated so bad that he had a minor heart attack. Okay. They rushed him in. He's good. He's great. He calls me up and says, Omar, we are in a budget for 2 months. We're not going to be able to pay our mortgage. We're not going to be able to pay anything. We need to cancel the insurance. So, well, listen, let's stop right here. Went over again the protection that he had in his policy. And actually, the insurance company, after we filed the claim, advanced him 50% of his policy. Okay. Company wouldn't let him come back to work because he needed a doctor release. Doctor wouldn't release him because he needed rest for 2 months. It's what people find. Have you ever met anybody that went through that?
I've had a few friends who, were financially strapped when something like this happened, but I've got short-term and long-term disability at work, so I'm not too worried about it.
You're not too worried about it at all? Okay, and I'm assuming that pays your entire salary, right?
No, I think it's like 60% or something like that.
60%. So it looks like you make close to about $8,000 a month.
Correct.
How much does that take home?
Just a little over 5.
A little bit of 5. Okay, write down $5,000.
Okay.
Multiply that times 6.
So 3,000.
That's all you have.
I guess never
Is
really
that
thought about
enough?
60% equated to.
So, no. Hold on. We're not done yet. Write down $1,800.
Okay.
Subtract that from the 3.
Okay.
That's
1,200.
what you really have. That's what you got. How much you pay for gas?
Oh, after paying more, yeah.
How much you pay for electric?
Another 300.
How much is volleyball?
Ooh,
It's like 500.
500 a month.
Okay. How much you think your meds are going to be when you just had a stroke, heart attack?
You have insurance.
Yeah, I mean, our insurance
I
takes
get
a
it.
lot of that.
Got it. And I'm assuming that's 100%, no deductibles?
No, there's deductibles. I mean, it's like 80-20
Yeah.
or something like that.
20. How much you think 20% of a hospital bill would be in a heart attack?
I don't know. Never really thought about it.
Yeah. Just want to explain a little bit more critical illness this, right? So the company will advance you a lump sum of money. This specific client got 50%. Some clients get different. I've seen it pay out 20 all the way to 95%. It depends on your own situation. Just want to explain what this does so you know what you're facing and what this will do so you don't have to face that, okay?
Okay.
All right. It also covers, Jeremy, in the event of a chronic illness, okay? Chronic illness is basically, hey, you lose 2 of the essential functions of daily living. Getting out of bed, taking medication, eating, dressing, bathing, or transporting yourself. The companies require that you lose 2 of those functions, and they require that you be out for more than 90 days. But if that would happen to you, we technically could apply for these chronic illness protection, okay?
Okay.
I had a client, Mundo Alvarez. He fell off a ladder, became disabled. He got advanced 25% of a $240,000 policy, okay? That's what this would do,
Okay.
okay? He'd rather be okay, not be in a wheelchair, but he's in a wheelchair and he doesn't have to worry about his finances right now. Okay. Got his long-term care, short-term care through work, and also got this as well. Lastly, in the event of a terminal illness, or in the event of passing, terminal illness gets issued to you, Jeremy, Elizabeth, in the event of passing, Jeremy's policy will pay out directly to you. So God forbid something happens and all you owe is $50,000 of policy, you would be able to pay off the home, and whatever money is left is for your own expenses, okay?
Okay.
All right. Now, Jeremy, this is term, okay? Term is like your car insurance, okay? Kind of like renting your coach. You got car insurance, right?
Yeah.
How much you pay for that?
What would they?
$225 a month.
Yeah, 225 a month.
$225. Hey, subtract that from the $1,200 you got left after, you only got $3,000
Quickly
left.
run
But
out of money.
yeah, so you pay 225. Out of those 225 that you pay, let me ask you this: how much does it cover you?
Are you talking about like the value of my vehicles, or like how much, like 100,000 for this, and all
The value of the vehicles.
I don't know, probably close to 50,000.
50,000. Okay, got it. All right, so you pay 225 for $50,000 in coverage. Okay,
Mhm.
got it. All right, so that's one option, Jeremy. Okay, the other option, Jeremy, same thing. It's $237,000 in coverage. This right here is same thing's term, but it has something called ROP, or CBO, which means for cashback option of return of premium. We'll try to make sure that you get the same thing: the critical illness, the chronic illness, and the terminal illness. Okay.
Okay.
If something would happen to you, that we don't lose that. We want to make sure that's in place. Okay. What this does, this is more like a savings plan, Jeremy. Okay. If something doesn't happen to you, you get 100% of your premiums refunded to you. Okay.
If something doesn't happen to us over 100 or over 30 years.
Correct. So let's say you put $100 in the bank. After 30 years, you would have put $36,000, right? Great.
Mhm.
But if something happens to you, you only have $100,000 times, hey, something happens in 10 years, 10 years. If something happens to you down the road in 10 years, the reality is Elizabeth still has a $237,000. But if you get to the 30 years, you're healthy, nothing happened, you didn't file a claim, you get 100% of your money back to you. Okay? Any questions on that?
Nope.
All right. Now, Jeremy, last option is $237,000. This right here is what we call protection for life. You own your coverage. Once you finish paying off your home, you're going to have the same thing: the critical, the chronic, the terminal, and the death benefit as well. Okay. You're going to have that all available to you. Okay. But this is more protection for life. You finish paying off your home, you're going to have two options. Okay. You want to keep your insurance, you'll be able to keep it, and it'll still pay out the $237,000 at one point to Elizabeth. Okay. Now, you don't want to keep your coverage. You'll be able to just say, hey, Omar, I want to cancel my coverage. Here's what I want to do. I want to just get all my money back, and you'll be able to do so as well.
With the third option.
With the third option. Mm-hmm. Now, the second option, to get 100% of your money back, you have to pay on it for the 30 years. Okay. This one right here, if you pay off your home 15 years down the road, you can cash it in. Or most of my smart clients, they keep their policy for the rest of their life. Why? Because, hey, whatever you're going to pay today, the reality is 20, 30 years from now, you're going to pay the same. Got it?
Got it.
All right. So, Jeremy, real quick, you explained to you all the options. Option one is the least expensive way to go, but it will cover you. Option two is, hey, you don't use it, you get your money back. Option three is protection for life. All have the same value from a protection standpoint. Option one and option two and three really have more value from a cash value standpoint. Okay. Which one would you like me to show you first? Or which one would you tell me, don't even look at that right now, Omar? I'm not even interested in that.
Well, we just moved in the house. We're still trying to figure out finances. So if I had to look at anything, it'd probably be the first one, just because you said
the first one.
Yeah.
Okay, this one right here. So, Jeremy, if we do the protection for this one, 237,000. All you want to do is look at the first one. You don't want to look at the other two.
Well, we're so young. Like, I don't think anything will happen to us in 30 years.
Yeah,
So
that's what
look at
Mr.
the
Pettis
second
thought.
one.
Yeah. I mean, if
Jeremy?
we can look at the second one, yeah.
You tell me, I just don't want to waste your time. I want to go and issue what you want me to do.
Let's stick with the first one.
Okay. So if we go with the first one, then Jeremy, you're going to pay about $148 and 22 cents a month.
Holy cow. That's a lot. Even for the first one, you said that's the least expensive.
That would be the least expensive one to go. If you go with I'll show you just for clarity right here. If you go with the second one, it's $241 and 42 cents per month.
Yeah, definitely the first one, but yeah, we got to think about it, and you know, we don't make decisions right away or anything like that. So we're gonna have to, you know, I've got all the notes written down that you talked about, but I think we're gonna have to really think about it.
You know, think about it. Got you. Why do you need to think about it, Jeremy? I just want to know. Okay.
I need to talk to Elizabeth and just make sure it fits in our budget. Like I said, we just moved in. We're still trying to figure everything out. So.
Gotcha. Well, let me ask you this. Okay. Why do you need to talk to Elizabeth?
I want to make sure, you know, we talk to each other about everything, all of our finances. So I want to make sure she's okay with this and comfortable as well.
Okay. What if she tells you she's not okay with it, Jeremy? Jeremy, pretend I'm Elizabeth. Hey, Jeremy, I'm not okay with paying the $148 a month. If you pass away, you know, we just move into a small apartment. I'll get a job. We'll have to drop out of volleyball because there'll be nobody to take my daughter-in-law to volleyball. Okay. Would you be okay with that?
No, absolutely not.
Okay. Well, what if you talk to Elizabeth and Elizabeth says, hey, Jeremy, yes, we need it. If something happens to you, Jeremy, I want to make sure that our life is going to change from a moral standpoint already. How long have you been married?
Just over 10 years.
10 years. So Elizabeth, you're probably not going to forget about Jeremy the next 6 or 7 months if something happens to him, right?
No.
Okay. So two things happen when you're in a funeral home, just so you know, Jeremy. I've been doing this quite a bit, long time. One, the couple has no protection in place and they got GoFundMe accounts and they're so stressed out about the finances that they don't even have time to honor their loved ones. Two, Jeremy, the reality is the couples have something in place. They're still destroyed. But one thing that does happen, Jeremy, is they have time to honor the loved ones. Would you like Elizabeth to be destroyed morally and financially? Because she's going to want to honor your life. You seem like a great husband. So do you really want to think about it?
No, I mean, I guess from my perspective, I do want to make sure she's taken care of. I do want to make sure that, you know, the kids are taken care of and she doesn't have to get a job right away. So I guess we've just got to pull the trigger.
Gotcha. Well, let me tell you a little bit more about this, Jeremy. One, you stated right here that this was your second home, right?
Yes.
Okay, think of it this as your first policy as well. A year from now, Jeremy, 6 months from now, I know you've been at home about 6 months, you're going to quickly realize that you probably spent $148 just to go out and eat with 5 kids and yourself, right?
Yeah, if not more, yeah.
So you're going to find out that, hey, $148 a month probably isn't a whole lot compared to what you're getting, okay? A year from now, 2 years from now, if you want to make sure this policy stays in place for the rest of your life, the reality is this. We'll set up another meeting. We'll go over some different options. We'll go again, the pricing again, what it will look like to have protection for life. And we might, again, you had a startup home. Think of this as your startup policy. Does that sound fair?
Yeah, absolutely.
All right. So what we'll do right now, Jeremy, is we're going to go ahead and apply. I'll take your application. I'm going to ask you a few questions as we'll go down the road. Okay. So we do that. Okay. Now, once I take your application, everything gets approved. I'm gonna stop a little bit right here. Symmetry family, that's all I really do, okay? I've been doing this for about 4.5 years, okay? The very first time I did this is it was August of 2017 is the very first time I did this. I find it odd that we call it back to basics because this is still what I do 4.5 years later. I carry the in-home script in my bag when I go in the home, and I have the in-home script pulled up when I'm doing it in the home over Zoom with a client. It doesn't matter. If I'm doing it over phone, it doesn't matter. But when I'm done with the client, here is my closing because I want to make sure everybody understands what I do when I close. Okay. Now, Jeremy, we stated that you want this policy to pay out to Elizabeth, correct?
Yes.
Now, Jeremy, from a me standpoint, what would you like me to do?
What do you mean? What would I like you to do?
You pass away in 2 years.
Mhm.
What would you like me to do?
Well, I'd like you to make sure that she gets the money.
All right. So I'm going to call you real quick, Jeremy. I'm going to call you real quick, Elizabeth. And I want you to just decline the call. And I want you to put my name on your phone. Okay. And label it Omar Insurance Guy, Omar Insurance Agent, Omar, the guy I call if something would happen. I want you to label that. Okay.
Okay.
So if anything ever happens, you just look me up and you give me a call, because here's what happens when the policy has to be issued. Okay. Jeremy, Elizabeth, something happens to Jeremy, you're going to have to call me. Once you call me, the reality is this. I'm going to say, hey, sorry for components, and I'm going to ask for the death certificate. And then we're going to work really hard and really fast to get this policy issued. The average timeline to wait after we receive the death certificate in this past year has been about 7 to 10 days. And that's the average that has been. Could be less, could be more. I don't know, but that's the average that I've had people go through. Okay. Now, once I submit it, we got it all done. It's all been submitted. As soon as I get the approval, I'll call you, Jeremy. I'll call you, Elizabeth. Jeremy,
Okay.
if you're too busy, I'm going to call Elizabeth directly, because I know you work and sometimes you can't answer the phone. Elizabeth, I'll call you and I'll let you know, hey, expect the draft to come through and expect the policy in the mail. If it requires any documents, I need you to really answer that phone right away so we can get those out of the way. Okay. So you got my number already there, right?
Yes, you got it.
Okay.
Yep. Got it.
Some of the things that they might require an amendment for whatever reason, or they might require a phone interview. That is required that we do that right away. So when you see my phone, it's an emergency, okay?
Okay.
If there's any change in the policy, for some reason they come back and say, we can't prove it, we're gonna meet again and we'll go over this again together to find out what's really going on, okay? Now, Jeremy, when you bought your home, you got a whole bunch of those cards, okay? Are you happy with what we just talked about today?
Yeah, absolutely. I mean, it kind of
Right.
covered where you brought a little more light to the attention that was needed.
Well, congratulations, and any further phone calls that you get, I just want you to ignore them, okay?
Okay.
Any other people that you might find out that need this type of protection? Okay, I want you to just, did you like the way I explained things for you?
Yeah, absolutely.
Would you like other people to have the same agent?
Yeah, I know our family, we have some family members. that
Yeah,
need
absolutely.
So I'm going to text you right now a link that you can share with your friends and family that will allow them to get a hold of me as well. Okay.
Okay.
But lastly, Jeremy, I don't want to take a whole lot of your time, but you stated you have a term policy from work.
Correct.
You don't own that policy. You know that, right?
Well, I mean, if I die, then I get money, right?
Yeah, but no, you don't get anything. Elizabeth does.
Well, true.
Okay, but you don't own it, right? That's through your company.
It is through the company, correct? I don't own it.
Okay. What if I could send you a text message and it'll tell me what it probably a little bit more expensive you currently have from work, but you'll be able to keep that no matter if you retire.
Yeah.
Boom. That's it. I sent them a text message for SPLI and see if we can replace their coverage as well from work. Okay. So that is it. Symmetry. Jeremy, Elizabeth, you have any last words?
No, thank you for considering us to help you out with this today.
Yeah.
I
thanks,
appreciate that. Thank you for being on this call. It was a truly honor. I'll leave it with this, Symmetry family. I know we're out of time, but John Maxwell says everybody communicates if you connect. And I wrote this down. Facts tell, stories sell. And oftentimes we start as new agents in Symmetry and we want all the facts and we want all the facts and we want all the facts and we want all the facts. Essentially what you're doing is you're helping yourself. What helps people is when you connect with them, when you truly find out what they're going through, when you really find out what they have and what they don't, because what they have is typically what they don't have. So when you connect with people through life stories, through borrowing stories, you'll be able to help them more than if you actually know everything and every single thing about insurance, okay? I was on a conference call last week and I found out something new about another insurance policy. You'll never know enough about insurance and you'll never know enough people. So stop focusing on preparing for the moment. Start focusing on, hey, how do I grow in the moment? How do I meet with more families? Because you get this script and the reality is this. A lot of people would say, hey, what does Omar do? How does he get the golden pen 2 years in a row? This is how he does it. He doesn't do it once. He goes out and does this protection 15 times a week, every single week. But I got something to do on Thursday, then I'll do it 15 times a week, Monday, Tuesday, Wednesday. But I'm going on vacation, then I work the weekends. But I'm going to do this, then I make sure I get those 15 meetings every single week. It won't work if you work it once, it'll work if you work 10 to 15 times. Brian Lane, I think, called it the price of entry, right? So that's what I'll leave you with. Be blessed, everybody. It was an honor spending some time with you today. Jeremy, Elizabeth, thank you so much.